Assalamu alaikum, everyone. I hope you are doing well. We got another green day in the market today, which is great. We'll take it. The VIX was down 5.7%. That's the volatility index. The dollar index was down a bit. That's good for risk assets. The Russell was up 1.26%. The S&P was up 0.64%. The Dow Jones was up 0.84%. The Nasdaq was up 0.55%. So nothing to write home about in terms of green, but green nonetheless, and I'll take it, especially in light of the few weeks that we've had and the performance and the pullback that we've experienced during those weeks. Now, it is important to remember, when in doubt, always zoom out. It is important to remember that if you take the pullback that we've experienced recently and you put it into context, we've basically just round tripped the Trump gains that we experienced. So if you look basically in the last 6 months, the S&P, that's what I'm showing on the screen right now, the S&P is basically flat over the last 6 months. We're basically where we were. So we were at 5,600. We're at 5,600 right now on the S&P. So just putting things into context, the world is not falling apart as some headlines often make it seem. Now, in terms of the theme of this live, which is the end, I will tell you the end of what. But first, let's look at the leaderboard and the loser board, I guess. And that paints a very important picture, which is that there is a rotation happening. You can see basically the entire market was different shades of green, except for the Mag 7, basically the biggest winners of the last few years. Amazon, Tesla, Google, Meta, Nvidia, they are all down, whereas the rest of the market is up. So perhaps a rotation is happening now between those winners that have become, in many respects, overvalued. I would exclude Tesla, but many of which have become overvalued. And I would actually exclude Nvidia as well. I think Nvidia is a really good price right now, really good value. But a rotation is happening from the Mag 7 to the S&P 493 that have really lagged the Mag 7 for many years now. Now, the end of what, you may ask? The end of QT is what I was referring to. So quantitative tightening. And in fact, something you may not know is that we've been in quantitative tightening, that is the Fed taking liquidity out of the market since 2022. And it does that by simply letting the bonds that it holds on its balance sheet expire. And so according to Polymarket, there's essentially 100% chance that QT is ended by May of this year. And so if an end of QT coincides with rate cuts, and we'll talk about that in a second, this could paint a really good picture for the markets leading into the second half of this year. Now, this is assuming, of course, this new administration doesn't do something completely bonkers. This is keeping investors on edge, not really allowing them to back up the truck on some of the prices that we're seeing in the market. But the macro, nonetheless, is pointing towards a pretty strong second half of this year, and maybe we get a strong rebound even before then. Retail sales came in today, and they were below expectations, which bodes well for the probabilities of an interest rate cut. However, if we dig a bit deeper into the numbers, even though the actual was 0.2, the expected was an increase of 0.6. If you exclude autos, they actually came in at zero point 0.3, which is in line with expectations. So this is perhaps why the probability for a rate cut in June didn't really move much. This is the closest meeting where the probability for a rate cut actually is more than 50%. So in March, rather in May, the probability is less than 50% for a rate cut. But in June, you have a 55.9% chance of a 25 basis point cut. If you look a week ago, that probability was 49.7%. So it did move up, but not by a lot. And one of the reasons why I'm very confident that we will get some aggressive cuts this year, I think probably two or three, is that the interest payments that the US government now has to pay exceed its defense budget. So we're now at 1.2 trillion in annual interest payments that need to be made. And there's about 7 trillion, 7 to 9 trillion that needs to be refinanced in the second half of this year. And interest rates need to come down in order for the government to refinance at lower rates and keep this interest expense in check as much as possible. So there's hundreds of billions of dollars on the line here annually with regards to the interest rates and where they end up by the second half of this year. And that's why I'm confident that we will get interest rate cuts this year and probably sooner than is currently being priced in the market, or at least the probabilities will change. And if you'll recall, a few weeks ago, I was talking about September, the market pricing in September being the timing for the first interest rate cut. We're not now talking about June. June may become more of a certainty, and maybe May becomes in the cards as well. Now, speaking of zooming out, and another reason to be bullish and not think that the world is coming to an end. If you look at the intra-year drawdowns and their magnitude, historically speaking, what we've experienced in 2025 is really nothing. We've had 8.6% drawdown. If you look at 2024, the biggest drawdown we had was 8.5%. In 2023, the biggest drawdown was 10.3%. In 2023, the S&P ended the year 26% higher. In 2024, it ended the year 25% higher. So just because we've experienced this drawdown doesn't mean the bull case for the year is not in play. And in fact, we're seeing investors, understanding this, they continue to buy the dip. If you look at the weekly inflows into equities, this is the third largest weekly inflows into equity basically ever. If you look at January of 2021, you can see the spike in the inflows into equities. And obviously, we had a pretty bullish period after that. And then if you look at September 2022, investors also got that right because we had a strong 2023, a strong 2024. And here we are at another peak, March 2025. Investors still maintain strong confidence in equities. And I think for good reason. There are a lot of good deals out there, especially today. If you look at the thank you, middle class investing, Ramadan Mubarak. If you look at the central banks and what they are doing buying of their own. They're not staying in fiat. So we've had record central bank buying, which has lifted the gold price to record levels. It's actually beaten the S&P. It's actually been quite a good hedge. And if you look at the performance of gold since the beginning of this century, since 2000 until now, it's, especially considering the recent rally that gold has been on, it far outpaced the S&P with an average 10% annualized return gold has versus the S&P, the annualized return. So if you take the ups and the downs, the annualized return is around 5%. Considering where we are right now. So conventional wisdom tells you the S&P beats gold more times than not. However, since the beginning of this year, and obviously if you change your start date, you're going to change the outcome here. Obviously, and if you look at, 24, 25, obviously the S&P did a lot. I'm sorry, 23 and 24, the S&P did a lot better. So it really matters the time range that you look in. But I think this is important to see because conventional wisdom has been, okay, let me just throw money at the market, buy an S&P ETF and just call it a day. This will do better than most stock pickers. By far, it will do a lot better than most stock pickers. But it's also not that hard to beat the S&P if you take the time to understand a bit about investing and what you're investing in. So, a shiny rock like gold can beat the S&P by a lot. And so, productive assets like a Tesla or something like that could beat it by a lot more than that. And even Bitcoin could beat it a lot more than that. So it really pays off to put some time into understanding what you're investing in. And this is why we have our community of Halal-conscious investors that are putting in the work to understand what they're investing in and helping each other out with their investing journeys. One of the big perks here is that you get a list of stocks and cryptos that I have conviction in, various levels of conviction in, as well as the upsides that I forecast for these different assets. And this helps a lot of people make investing decisions, or at least it can inspire them with regards to investing, and it helps to compare notes. And so move for move, people are able to follow exactly when I buy and when I sell. We're running a promotion, Ramadan 2025, 35% off when you use that code at checkout. So take advantage of that while the promotion lasts. With that, let me take some questions. Hamid Amiri says, Salam, Brother Rakaan. If you have to guess, when do you think lithium prices may recover? I think probably at the end of this year, beginning of next year, we see a recovery in lithium prices. But the question you have to ask yourself, Hamid, is when will the market price in the recovery? That's kind of tough to gauge. Now, something that I will say is that if you look at something like Piedmont Lithium, a stock that we have interest in that has been beaten down lately because, well, initially it was because of lithium prices, but now it's more in response to the general market activity. I think that you look at the price right now, and this is not just lithium prices. This is also, the entire market has taken a beating. And so I think that a recovery there will probably be even sooner than the recovery in lithium prices. Hey, assalamu alaikum, Dr. Boss. Nice to see you. What was the lag between the M2 money supply, liquidity, and BTC? That was 50 days, according to the chart I shared. According to the chart I shared last week. Rashad, nice to see you. Thanks for moderating as always. Yeah, spooky title, but and actually something to be optimistic about. In the words of Habib, smash like. Yes, indeed. I mean, Assalamu alaikum, middle class investing. Nice to see you. Zuhair, Assalamu alaikum. Ahsan, salam. You were right about M-phase energy. A year ago, it has started to gain momentum now. It's a shame. Yeah. If you ever leave anything for the sake of Allah subhanahu wa ta'ala, Allah subhanahu wa ta'ala will replace it with something better, and inshallah He will. Ahsan. Hafiz says, Tesla's long-term success is tied to Musk, and Tesla lacks a clear successor. Tesla could face leadership instability. Will key man risk affect long-term valuation of Tesla? I think it's possible, but if you look at something like Apple, obviously Steve Jobs was very instrumental in Apple's success, but it ended up, I mean, the majority of the appreciation in Apple's market cap came after Steve Jobs' death. I don't think it's far fetched to assume something similar with Tesla, especially considering the main lines of business already have enough momentum behind them. So obviously the manufacturing and delivery of vehicles, that's probably the least exciting business that has reached escape velocity. I think the storage business, that's growing like weeds, right? So there's a lot of momentum there. If you look at their robo-taxi business, that's going to be the multi-trillion-dollar business, I believe. That, we're 12, 16, 24 months away from fully operationalizing that. And then you have the robots coming at the end of this year. So they should be, coming off the assembly line at the end of this year. So I think that, and these are really the main plays that got me into Tesla. So I think that there's enough momentum behind them that there should be many years of runway of appreciation for this stock, even if something happens to Elon Musk. But obviously, I think the innovative side, Elon Musk has a lot to do with. But in terms of the operations and execution, I think that there's a lot of competent people in Tesla at this point that can take these different lines of business to what they were envisioned to be. Assalamu alaikum, Akhi. Could the stock Cisco Systems be interesting enough to have a look? Take a look at Cisco, and if my memory serves, I think they have some pretty strong ties to Israel in terms of like their operations. So take a look at that, but yeah, Cisco is a stock I haven't looked at for I think more than a year now, so I'm not really sure. But last time I checked, I thought there was, there may be some connection there. It's worth taking a look at that, brother. All right, smash like, as Amin said, and thank you for tuning in. Big week today, big week this week, as Jerome Powell will give his press conference on Wednesday. I think that will set the tone for the markets for the remainder of the week. And so long as Trump keeps his mouth shut about tariffs and doesn't introduce anything else, doesn't get the country into a war, hopefully, the markets should be good, I think. So with that being said, make sure to take care of yourself. Love you all. See you next time. Assalamu alaikum and peace be upon you all.